Everyone gets in this common I have to use my own money, which is beautiful in the beginning, right? If you can learn how to leverage other people's money in the beginning and truly understand that, that's going to be a game changer.
40% of licensed agents want to become real estate investors, but the problem is that most don't quite know where to start. In this video, we not only break down how to get started, how to actually get started without using your own money to mitigate risk, and how to not only pick the best areas, but what to make sure you're mindful of during the shifting market. And we're also going to dive into the costly mistakes that this investor did that you need to make sure you avoid so you don't run into the same issues. So I'm really excited to bring on Dave from Investor Mel and Dave, who are big real estate investor coaches with a massive network and have done this so many times that they know all of the best practices, and we're going to be diving into all of them today. Now, before getting into this incredibly valuable interview, two quick things. Number one, I'm going to link all of Dave's profiles below because he crushes it with social media. He's got tens of thousands of followers, gets massive engagement, and is going to give you the blueprint and a ton of free value from all of his social profiles on Instagram, TikTok, and YouTube. But also I'm going to link his calendar below if you want to reach out to talk to him about partnering with him or getting his support with real estate investing. So without further ado, let's bring on Dave and give you the roadmap of how to get started as a new real estate investor. What's going on, guys? Welcome back to another video. And today we've got on a very special guest to talk about something that almost every person that will follow this channel is going to be interested in, which is the investing side of things, but also being able to pair that with social media and how to expand your investment portfolio. So very special guest we have on today, Dave from Investor Mel and Dave, who've got an incredible social media presence and are absolutely crushing it with such a massive portfolio and so many people that you're now working with in multiple countries even. So I'm really excited to dive into how somebody can even get the ball rolling in the investing space, and then we'll talk about some of the more creative strategies at the end about how to do it using other people's money as well. So Dave, what's going on?
Hey Mike, thank you so much for having me on the show. Appreciate it. Pumped to be here. And yeah, excited to talk about real estate and other people's money. Right up in my alley.
Definitely. Well, before we dive into some of the tactical of where people should start if they're looking to just get their feet wet investing and start to get those first properties under their portfolio, why don't you give yourself just a brief introduction of who you are, where you're from, what kind of got you into this space as well?
Yeah, I'll give you kind of where Mel and I are right now, and then back to the humble beginning. Basically, quick get to know me. But Mel and I are now full-time real estate investors. We were both able to quit our jobs in our 30s. I used to be a firefighter. She worked at the local college doing program development, something like that. Anyway, I can't remember exactly what her title was, yeah, we currently have purchased now over 240 units or doors in 5 different countries: Canada, US, Costa Rica, Mexico, Dominican Republic. We've written, Amazon best-selling books, awards, so keynote speakers, all that stuff, right? And but more importantly is we have a mentoring program, but we're real estate investors at heart. And we basically started off with our own money in the beginning, made a lot of mistakes, and and unfortunately spent a lot of money on mistakes and fixing those mistakes. And then we got coaches and mentors, which is so important, and that helped us get to where we are now. But yeah,
I think it's really important. And again, I think you and I have very similar beginnings in the sense, very in 2 different lanes. But, I think there's a lot to be said about starting and making all those mistakes yourself. I had to do it with not having the money to invest in a coach in the beginning. And then all of that I did is tried everything myself. And you become such a weapon by learning all these skill sets. And then you bring in mentors on top of that, and you become unstoppable in what you could do with the growth and trajectory of your business. So I love that because now you're well-versed, you're knowledgeable, but more so than what some other people that have done in your space is that you've actually walked the walk. You're a practitioner of it. You've done it, you've tried it, you know the mistakes, and now you're able to help people shorten that learning curve by avoiding those mistakes, saving thousands of dollars and thousands of hours to go straight to what works, which I'm excited to kind of dive into a little bit today. So, coming into this year, there's going to be a lot of people that are seeing the market shift, waiting for opportunities to come. And I think there's a lot of people that are excited if they're sitting a little bit liquid right now of some of the opportunities that are going to be presenting themselves over the next number of years to start building that investment portfolio and either scaling the one they have or starting one if they don't have one. So looking at that trajectory, what is kind of your advice initially for somebody saying, hey, I've got no properties. I've got nothing in my portfolio. I understand the importance of building equity and gaining a rental portfolio, but where the heck do I start? What do I do to get that first one? What are some of the strategies, or where should you be focusing your time if you want to start getting into this space?
Yeah, and great point, Mike, with the where the market is going, honestly, in the beginning, it's going to be, and this is going to sound a little cliche, but it's so true. Mike said it. Save thousands of dollars, thousands of hours, right? I wish I could go back and gotten coaching and mentoring in the beginning. So just learning from the right people and making sure that, you know, what goes on between, or what you listen to, what goes in between your two ears is sound advice, right? So making sure you're learning from people who have been there, done that. So that's really important as well. And I'll kind of reverse engineer is, what are you looking at getting out of real estate? Like, people come to us all the time and I want to quit my job. I want to be able to put my kids through university. I want to go on trips. I'm like, okay, cool. That's awesome. So you're looking for more cash flow. You're looking for more possibly passive income. So let's reverse engineer that, and let's look at where you want to start buying real estate, right? Because a lot of people, and I'm not saying you need to move cities, but and I don't think it's a big secret, but if you're looking at building a portfolio of passive income and having higher cash flow, people that live in the bigger metropolitan centers, right? Like the Torontos, the Vancouvers, the Miamis, the San Francisco, like there's nothing wrong with living there. Just, I want you to kind of gear your expectation to, are you going to be getting $500 a door downtown Toronto, downtown San Francisco? Probably not, right? And there's nothing wrong with that. It's just understanding. So live where you want to live, but invest where returns are best is what I tell people. And that's why, again, understanding how to do it in different markets where you don't need to be there is so important. Now, the other thing I tell people is, because everyone gets in this common, I have to use my own money, which is beautiful in the beginning, right? You go to the bank, you have your own money. If you have enough money, the bank will finance anything, right? With a big enough down payment. Doesn't mean it's a good deal, but everyone goes through it. Mel and I went through it as well. I think we had 4 or 5. I think we had 5 properties when the bank said, you're done. Even though we had the awesome ratios, awesome jobs, because again, we were using our own money in the traditional way. So if you can learn how to leverage other people's money in the beginning and truly understand that, that's going to be a game changer, because you might do 1 a year with your own money, 1 every 2 years. Whereas you could be doing possibly 2 to 4, 2 to 5 a year with other people's money. So I would definitely learn how to do that. And then obviously the social media, which I know we'll touch on as well, Mike, is a total game changer. So those initial investors, be open to that. Yeah, know which market you want to invest in. Start using other people's money and how to do it properly. And like Mel and I do, we don't do joint venture partners, meaning that you don't have to share your profits or your proceeds with someone, which again allows you to scale faster. You'll pay interest, right, on the money you're borrowing, but you won't pay equity and you won't pay ownership to someone else. So that's what I would tell people, or someone starting out, Mike.
Yeah, definitely. And I think it's important because, again, it's creating leverage. And I think a lot of people are really focused on, I see this a lot in real estate, is they join 100% brokerages because they think they make 100% and that's the best, but 100% of what? I do not know a single top producing agent in North America that have ever met this at 100% brokerage. Because if you're not giving anything, how do you get anything in return? And I think a lot of people have that perspective in investing, is saying, well, I want to do everything myself. I want it all in my name. I want to have all of it with my own money. I want to have ownership of everything. But how quick can you scale? How much leverage can you create? How much momentum can you build? And where do you reach that capacity if you're always just trying to be the man of the show? I think there's a lot to say about, humbling yourself and reducing the ego aspect and saying, hey, if you want to go fast, go alone. If you want to go far, go together. Looking at opportunities, partnerships, and being able to build that into the scalable long-term plan of your business. Now, there's a multitude of different ways to invest, and you know this better than anybody, but what are you seeing as one of the best ways to start investing in terms of, you've got people that are saying you can go wholesale, you can fix and flip, you can buy and hold, you can do notes, you can do all of these different things, commercial, residential, for somebody that's just getting started, and I know that this depends on how much money you have and all this kind of stuff in the beginning, but, for people that are just getting started, what do you find is a good trajectory to consider going on to maybe mitigate risk if you're looking to get those first couple under your belt?
Great question. And what I'm seeing, a lot of people come to me, they're either not able or priced out of their market to buy their first single family home. They're new to Canada and they're saying, Dave, the banks won't say yes to me right now. We've had multiple students that new to Canada. What I'm seeing, I should say the lowest hanging fruit for someone that is looking at getting into their first principal residence or getting their first property under their belt, is house hacking, right? So for example, like my first place I bought for a single family home for like 156K, 800 square foot house, right? Nothing to brag about, but if I knew what I knew now, I would have spent the 180,000, the $30,000 more at the market at that point, and I would have bought a duplex. And I would have, and this is house hacking, where basically you live in the dwelling, and there's another income producing dwelling in there where you can rent out and actually make money off of. So I wish I would have done that in the beginning. And the beauty of this is it can be a single family home with a basement helper, or a side by side, and you live in one, or whatever. I'm just giving you an example. But if you're starting out, this is an easy way to get into it. There's a lot of seller financing deals where you don't have to go to the financial institution. People will finance it for you, and you can have a creative down payment. You could live in it. It'll pay probably, hopefully, the most of your expenses, if not all of them. So it's an easy way to obviously burden or lift the burden of the expenses of it. And then eventually, what I love about this is you're going to move on from that property eventually. I don't know, you decide to get married, decide to have kids, you decide to live somewhere else. Eventually, when you move out, that unit that you were occupying is now going to get rented out to someone else at market rent. So this place will start to be now not just helping you pay your bills, but will be an actual income producing asset. So that is something that I wish I did in the beginning, 100%, to get into it. The other thing too, Mike, I love that you touched on is everyone thinks using my own money, right? Because then it's me and I don't have to pay anyone interest. It's true. However, again, you only have so much of your own money, right? So, and creating win-win relationships, like now, I just use seller financing for this house hack. Well, aren't you going to have to pay them interest on this property? Like they're not just going to do it for free. 100% you're going to have to pay them, right? And you should pay them well, as long as the deal makes sense, obviously. But they are going to be providing you with financing. They're going to be the bank for you. They're probably most likely not going to make you jump through as many hoops as the banks do in the underwriting. Like there's a price and a premium to pay for that, as long as the deal makes sense. Again, I want to stress that. And then even private lenders, will you pay them interest? Yes. But if you can buy multiple properties a year because you don't have to use your own money, again, you're creating those win-win, like Mike said. What'd you say? Do it fast, do it alone, do it long-term, do it with other people. So this is a way of doing with other people, creating win-win partnerships. And again, you're going to pay them interest, but then you're going to have income producing properties for the next 20, 30 years. So it's thinking bigger picture.
Yeah, 100%. I think that's really important for people to scale and look at that long-term play, because I think there's a lot of greed that goes and just, I think it all stems from a good place. I think it stems from pride. I just think that pride can get in the way of what's actually possible if you follow the right strategies and look at a bigger picture and that long-term projection of what you can do when you start to leverage, partnerships with other people. Now, one of the things that, not only am I curious about, but a lot of people are going to be curious about, especially when you kind of alluded in the beginning to the fact that you're investing in Canada, in the States, Costa Rica, Mexico, all of these places, Dominican. When you're looking for a place to invest, what is some of the criteria that you're looking for that somebody can follow? Because I know there's sometimes people looking on the macro, which is places with, a good, debt to income ratio, or there's people that are then on the micro looking for, properties that are close to schools or close to this and like, when somebody say, okay, I'm ready to start investing, but I'm in a market where it doesn't make any sense, like the GTA, for somebody just getting started out, where in the globe would you start looking at, and how do you start to vet those locations as saying, oh, I've pinned this as a good opportunity. Now that I know this state or province or city is good, then how would you narrow that down to maybe an area within that location?
Yeah, I love that, Mike. So yeah, the 40,000 foot level, let's say if you're looking at the US or Canada. So for example, in the US, Mel and I are investing in Texas and Florida. And why did we choose those? They are landlord friendly states, right? Meaning that, again, it's a business, right? I'm not saying that you need to be ruthless, but if there are things that happen, if you have non-payment of rent, those states do give you the ability basically to do something about it more than other tenant-friendly states, right? So it's just picking where you want, if you want to have more teeth as an investor or less teeth, right? The other thing too, the state tax are beautiful there. The growth, I don't have to tell anyone of how quickly Texas is growing. Houston is projected to be, I think, the biggest city by like 2050, or I might be off on that stat. Elon Musk is, he's bringing his business there. I forget the place by the border, anyway, it doesn't matter, but Florida as well. Why are we doing it? Because it's the epicenter, right? They can't build them fast enough. People are flocking there. Real estate's only going to go up. Again, it's landlord friendly, the state tax, all that stuff. And then in Canada, Alberta is very landlord friendly as well. There's no land transfer tax when you buy places. Out east as well is very a high cash flowing place. Not to say again that you can't make money in the British Columbias, the Ontarios, like we still make a lot of money in different provinces. It's just, you want to start looking at that as an investor, like what's important to you, okay? And you don't have to go to a different province or different state. You can still make money in your province or state, 100%. I'm not saying that. It's just understand that that's why people go different places. And then kind of to go on the micro, excuse me, to go on the micro is once you've picked that province or state for whatever reasons, when you're looking at the markets, you're going to want to look at different things. So like I mentioned earlier, most people that come to us are looking for the cash flow. So you're going to be looking most likely, typically, at more of a tertiary market, more of a market with a higher cap rate, which basically means the higher the cap rate, the lower the purchase price, and typically the higher the cash flow. Again, I'm not trying to paint everything with a broad brush here, but that's a general rule of thumb. So once you've established, you go micro, then you can start looking at places. Population is also, you might have, like I'm looking at a place in northern Texas where it's got is it like a 12 or 14% cap rate, which is huge cap rate, right, for investors. But then the township or the county has, I think, is it 2,000 or 4,000 people, and the real estate agent I'm dealing with is also the property manager. His brother's the contractor. There's some cons there too. If something happens there and the relationship is burnt, I'm SOL in that market. So it's understanding that obviously not the highest cap rate is the best, not the smallest market is the best as well. But all of that is definitely things investors should be taking into consideration when they're looking places.
Definitely. No, I think that's really incredible. And I think that kind of segues into one of the other things a lot of people are going to be curious about, which is, we've kind of talked about best practices. What are some of the big mistakes that you see people making, or that you've made in the beginning, that people can avoid? Because I think that's going to be a big one. Is a lot of people just read a few books and they go out there and theory is a lot different than practice. So if somebody's getting started but they're a bit hesitant because they don't want to slip up, obviously that's part of the journey. But what are some of the most common ones that you see that people can have a red alert for to make sure they avoid?
Great question. And I'll talk about, Mel's not here, right? But a mistake that Mel did in the beginning, and this is something I believed as well. So not every deal listed on the MLS is a good deal. And I did this exact same mistake. I thought before, and this was when I first started, if it's on the MLS, it must mean that it's been vetted, that it's, it's legit and everything's good to go. Which is totally not the case, right? You still need to do your due diligence wherever you find the deal. So a little bit down the rabbit hole, Mel had purchased her initial income property. This is before I met her. We had done the typical BRRRR, right? We buy, we renovated, renovate, rent, refinance, repeat. So we had done all that, and we were at the refinance stage. So bought a house, made a place up top, made a place down below, right? And we went to the refinance stage, and it turns out that the zoning and the allowable usage was not done properly, right? So then we got the appraiser went to the city. Once they found out what was going on, they actually shut down the project, and Mel had to decommission everything. And we thought, well, we're buying through a realtor. Wouldn't they have done everything? Again, so it was the misassumption of assuming that other people are going to do the due diligence for you. And I'm not blaming the realtor. It wasn't their fault. We should have done our own due diligence, but we didn't know what we didn't know. So I see a lot of people trusting too much and not doing their own due diligence, and zoning and all that is just one thing. The other thing as well is the business structures that I see. A lot of people, for some reason, let's say you're going to go buy a McDonald's franchise, or you're going to go start a whatever business, they take it serious, right? They go see the lawyers, they make sure that they look at it as a business structure. A lot of the times with real estate, I find that people think, oh, well, it's just like a side hustle. It's just a little something. I'll buy an income property and, I don't put much effort into the business aspect. And it is a business. Like just because it's real estate doesn't mean that you should not look at it as its own thing, its own business. So a lot of the business structures that I'll see people, and again, guys, I'm saying this from nothing is theory here. At one point, Mel and I had 18 properties in our own name. Our total debt service ratio and total debt to income was zonked. We couldn't even qualify for a house. And it cost us like $400,000 to flip every one of those properties into entities, land transfer twice, legal twice, accounting twice, breaking mortgage and penalties. So again, it's just making sure that they're structured properly in the beginning if they're going to do this for the long haul. So those are the two major things that I see people unfortunately stumble upon.
Yeah, that makes complete sense. I think it's really important to, walk before you can run. A lot of people don't do their due diligence when looking to get into things because they're just so excited about the opportunity. They're reading all the books, seeing all the videos, and they just want a piece of the pie. But it's really important to set up that proper foundation because, a lot of people want to build an empire and a real estate empire, but you can't build an empire on a single family home foundation. And a lot of people are just trying to run with a cracked foundation. So I really love that. Now, before switching gears into the social media side, just to get your kind of general opinion of what you're looking to do going forward, where are you starting to see opportunities come up in terms of you are in different countries, you are looking at, different opportunities in different areas, like looking at you now that you're expanding your portfolio, which is going to be people that already have a portfolio looking to expand. Where are you looking to go in the next couple of years with your investment opportunities?
Yeah, I love that. And being part of EXP, I've now been able to make a lot of different contacts, right? I've been talking to people in Portugal, talking to people in Spain, where was it in Asia? I forget. But yeah, so we're the five countries. I definitely don't want to stop there. Looking at different opportunities. The opportunities that I'm seeing right now, being in where the market is, and everyone knows that we're going through anyway a turbulent time, or the economic climate is different. What I'm seeing right now, and again, I'm going to continue those five countries, and the other ones that I've just mentioned. Spain is something that's come up as well. But what I'm seeing so much of right now is the opportunity that I'm seeing is a lot of the mom and pops. They should have sold probably Jan or Feb of 2022 at the height of the market, right? And they didn't. So what I'm seeing all over Canada, all over the US, Costa Rica is seller financing deals as well. Like, again, it's not just, North America here, is a lot of people did not do their due diligence and they did not do underwriting properly, or they should have exited at the height of the market. And now either they need to exit the property for, financial reasons, or they need to exit the property for, hey, succession planning. I want to retire. I've been doing this for 20, 30 years. I need my money so that I can, continue on my life. So I'm seeing a lot of seller financing from people that were not necessarily open to it before, because the underwriting and the stress testing has really ratcheted up. So not as many people can qualify, but people that need to sell still need to sell. So I'm seeing a lot of opportunity there. The reason as well, Mike, why we jumped into those other three countries is like multifamily, long-term rental, bread and butter. Like that's what we've been able to put our jobs on all day, every day. However, there's still lots of money to be made in the short-term rental game, right? That's what we're doing in Orlando as well. And then the Costa Rica, Mexico, Dominican. As a Canadian, I get excited at USD money, right? Like who doesn't? So, and if you're not wondering what I mean, it's because we're at $1.36 or whatever the exchange is right now. So the fact that we can buy income properties, and let's just use Costa Rica. We were there a couple of weeks ago. Mel and I went with our 8-year-old Colton. We stayed at our condo for a week, and then we stayed at one of our casas, our house, for a week. Didn't cost us anything, right? It's going to be a business write-off because we met with the property managers. We're checking up on the properties, and the places have already appreciated 6 figures in USD dollars, right? So that's the attractiveness, is going into these other places. But yeah, you're able to do this with different types of investing strategies.
That's super cool. And one of the things that you've been able to do is very well is scale, and you built this brand, and you've built a lot of credibility. And I love what you guys are doing with social and creating this value-driven content. So I think, one of the things to kind of pull this full circle is, as an investor, why did you decide to lean into leveraging content, and what is your recommendation in terms of what have you done with content and what's it done for you, and why should somebody consider doing this as well?
Yeah, and Mike, you know this better than anyone. Like Social media has just been a total night and day game changer on all of our aspects of our business and businesses. And just something to kind of, and not gonna lie, Mel, my wife Mel is the driver behind the social media. Like I can't take all the credit, but basically, like I still remember when she wanted us to do the website initially, and I kind of looked at her like, really, a website? Who, what's that going to do for us? And I've eaten those words multiple times over and over again. But creating social media in the beginning, again, when we were looking for other people's money, right? This is what we would do. We would say, well, go look at our page. Like it was a way of, I don't want to say validating, but I can't think of the word I'm looking for, but it was creating that trust or trustworthy that really helped. And now it's just obviously a lot easier, but the social media aspect, being able to show people our projects, like, hey, we just made a YouTube video, or we did a couple of posts on, look at the before and after of this flip, right? I took this duplex, and here's what it looked like before, and here's what it looks like after, and here's my after repair value. The proof is in the pudding. Like, people just flock to us after with money or projects, because they were like, hey, I've seen what you've done. I now get to know, like, and trust you. And this is something that either I want to sell you my property and hold a mortgage, or people that have registered funds, like in Canada, right? RSPs, TFSAs, LIRAs, because you can use your own and other people's to invest, or in the States, 401k, Roth IRA. Hey, I've got money. I want to invest this project with you. I'm willing to do X, Y, Z. So it's really been night and day. Mel has she's been the driver on it, but growing a brand has made everything so much easier. And yes, you have to create content and all that, and I love creating content now. In the beginning, I thought not that I thought it was a hassle, but now that I've seen the payoff, and again, it might be more of it's not a short term, it's a mid to long term goal, but I wish I started social media a lot sooner and put a lot more emphasis on content a lot sooner. It's night and day.
Yeah, 100%. And it's really cool to see the leverage that it's been able to give you, but also, like you were alluding to, is that it's basically a running active portfolio of who you are, what you do, and the results that you've had. And there's no better way to continue to get deals and business partners than to be able to pull something up and say, hey, you want to see what we're doing? Here's an endless library of the things that we've done, and for people to be able to have access to that at massive scale. Now, the final kind of thing about social media is, what did you start putting a focus on? Because I know that you've got an incredible Instagram profile, you've got, channels, podcasts, and everything. What for you has been the focal point with social, and what would you recommend as somebody that's an investor to put their time into?
I'm trying to think. In the beginning, I think it was Facebook. It was mostly, honestly, and YouTube. Initially, YouTube, I wish I would have started earlier, because initially we're like, oh, YouTube, everyone kept saying it's more of a long-term play. And some of the people, the marketing people we talked to, like, you know what, you've really got to commit. And we kept pushing it off, knowing that eventually we're going to dive into YouTube. But anyway, so I wish I would have started that sooner, because it's the platform where people go to learn on. So that's the platform, to be honest with you, we're playing the most catch up on, as opposed to the other ones. But so I would definitely recommend YouTube 100%, which obviously you've excelled at, Mike. But yeah, it's doing stories and doing posts on other platforms as well. Just don't overthink it. Do a video. Like, we look at our old stuff, our kids call us cringe because they're like, look how funny you guys looked and all that. But the fact that we put out those videos, and the fact that people were able to see us on posts or stories or YouTube videos, is a lot of people will relate, right? They'll go, oh, Dave used to be a firefighter. So we get a lot of cops, paramedics, and firefighters that, if they're looking at doing deals, they'll contact us, because I've been in that field. Mel worked at the college. Mel was a single mom. She's been through divorce. So, like, we had a car crash. If we didn't have social media where people could actually see and relate to that, we wouldn't have the portfolio that we have, and we wouldn't have the fundraising and the Action Family Mentoring Program that we have. Because again, social media gives people that excuse me, Mike, gives people that insight into who you are, just behind a quick glimpse. It actually shows if you're cheesy, or if you like dogs, or if you like hockey, or whatever it is. So yeah, I would just say film some stuff, get it out there, and people that resonate with you will definitely reach out to you or follow.
Yeah, definitely. It's so important because it humanizes you. And I think a lot of people think as especially as you start getting bigger, is that, they almost look at investing as like this corporate entity that are coming in and buying properties. But when you can humanize the people behind it, it makes it so much more inviting. It makes it so much more of an opportunity to build that emotional connection with the people that you're going to be working with, which only makes the journey and the process so much more enjoyable. So, pulling things full circle, Dave, it's been incredible to see, what you've been able to do to help so many other people. And there's kind of two different avenues that people now have the opportunity to do, which is, you've got ongoing mentorship to kind of help people with this, and then you have the ability for people to now partner with you as well, with, both you and myself. So why don't you talk to people as we bring this full circle of what it's like to partner with you via either of those avenues, and how they can, work with you to take their business and their portfolio to that next level.
Yeah, I love it. So if you're an investor, I'll talk about an investor and then someone who's a real estate agent and wants to be an investor as well. So the two different avenues. Thanks, Mike. So if you're an investor and you're not a real estate agent and you're interested in learning more, Mel and I have the Action Family Mentoring Program, where basically we show you how to purchase income producing assets, just like us, with no joint venture partners, using other people's money, doing it in Canada. Well, you guys already heard me say the different places. So we truly help people excel. This could be your first property or your next property. We have new Canadians, new immigrants to the US. We're showing them who the banks are saying no, they can't even buy their first place. And we're showing them how to build a portfolio and how to do it best. So that would definitely be the first avenue. The second one, I've teamed up with, I joined the Wolf Pack, very proud Wolf Pack member with Mike and Connor, love it. With EXP Realty. To be honest with you, Mike, I never thought I would become a real estate agent. I started watching your videos and I was like, because I thought, I'm an investor, I'm set, I don't need to do any of this. And then I saw the value, and no one explains it better than you do. I saw the value that EXP brought. And I was like, OMG, I'm gotten that. I got my license right away and joined you guys. I still remember our first conversation. You guys deliver so much value in the Wolf Pack. You and Connor are awesome, and everyone else in the team. It's almost overkill in value. It's so good, right? Which is a great problem to have. Instead of the people that overpromise and underdeliver. But that's something, again, if ever you did want to reach out, if you are a licensed real estate agent or thinking of becoming one, and you did want to join the Wolf Pack, if ever you did join, through myself, you also get our coaching and mentoring program that I just been discussing on how to buy income properties and without your own money and no joint venture partners. Plus, you get everything that Mike and Connor offer in the Wolf Pack. So we've tried to do the best value stack possible, where I'll show you how to be an investor focused agent and how to build your own portfolio, and then the Wolf Pack will show you how to be grow the social media aspect and be the best overall real estate agent. So that's why when I was doing my research, I was glad I stumbled upon Mike, which I'm no surprise with your YouTube presence, and join the Wolf Pack.
Yeah, it's been incredible, and I think this is such a huge value package for people, whether you are an investor or an agent, because 40% of licensed agents want to invest, but the issue is you see so many people that never reach their potential because they're capped based on knowledge, skill set. They don't have the partnership opportunity, and they're looking for people to, again, paint that blueprint and that proven path that they could just follow, which you guys have done in multiple different markets, countries, and have repeatedly, proven your vetted process. So guys, as always, I'm going to link all of Dave and Mel's stuff below in the description and the pinned comment. You want to make sure to go check out all of their different platforms, their website, vet some of the opportunities that they have, because they're doing absolutely incredible things, and people are, raving about working with them, which has been just awesome to see people go from having nothing to building these incredible portfolios. And there's going to be no better time than the coming years to start looking at expanding that portfolio, but more importantly, working with people that can help you avoid that learning curve and all those costs and mistakes, and just go straight to what works. So thank you, Dave, for coming on today and sharing all that incredible value.
Yeah, thanks so much, Mike. And again, thank you for everything you've done for Mel and I, and so glad to be part of the Wolf Pack.
Definitely. Thanks so much, guys. Please make sure to like, comment, subscribe as always, and we'll see you in the next video.